Today, I have the pleasure of introducing to you Andrew Shaw. He is a financial advisor with Edward Jones, and I've known Andrew for a little while because we were in a networking group together. He is very passionate about his career, and he's also had a prior career prior to becoming a financial advisor. So rather than me tell you about it, I think it would be best if we let Andrew take the floor and tell us what's going on.
No, thanks so much for having me. Happy Friday, and I'm honored to be a guest on your show. So
thank you.
That'd be fun. Yeah. Well, so
let's start in college.
Yeah, cool. So to be succinct, yeah, I went to I played college football, and that was very important to me at the time. And then coming out of that, I wanted to like hit the ground running and make money. I didn't want to like, it's a big transition actually, because football was like such an intensive part of like, it was kind of, it was how I thought of myself. It was like why when I ate lunch, I was thinking about how many calories, because I got to put some, whatever. It was like, it kind of was an all encompassing thing. And so coming away from that, I knew I really wanted to sink my teeth into something. So actually my first job out of college was, I got hired on by Jones before I graduated. And so as I was graduating, I got hired into this program that's called it's actually defunct now. They just cut it last year, but it's called the FACD program, Financial Advisor Career Development. Oh. And so there's a lot of young people that start in this business and fail. Actually, in this business in general, these firms are kind of notorious for hiring a bunch of people, saying, hey, give us your 20 best contacts you have. And you're like, oh, well, Uncle Charlie's got all this money. I'll put him on the list. And then the lady from the milk store, and then when you inevitably fail, they just take your list and they give it to the big producers in the office. And that's how they, bring in assets and stuff. So that's kind of the reputation of the business. And so this FACD, Financial Advisor Career Development, they take a year, they put you up in St. Louis, which is where the firm is based out of, and they give you a little something and make it worth it for you. And they teach you how to do it. And for about a year, and you kind of work in different parts of the home office and stuff, and you see different parts of the business. And so that was how this whole journey started for me, right at 22, right out of school. And 10 years later, I've worked for 3 other employers, but I'm back here, and it's been a lot of fun.
So 3 other employers. So where'd you go?
Yeah, so a big part of the business is kind of so it's the end of the day, how I'm compensated is I'm a fiduciary on assets, and I advise people on what they should do with their money. And for that compensation, you collect a fee. And so how many assets you're advising is really kind of the name of the game. And so you can go out and you can knock on doors and you can go talk to all these business owners and talk about 401k. And so you can drum up business. Or where I went is sometimes people will come to you and they'll say, hey, actually, I'm a manager of so I took 2 books of business. So 2 different people approached me and said, hey, we'd love to have you advise the credit union here on on our several hundred clients, and you can make more money than you're making now, right? And that happened twice.
Wow.
And kind of the read through for that, or kind of for your audience here, what's interesting is that sales managers, I hope I can speak freely here, but sales managers are a special type of people, and you really have to really take what they say with a grain of salt. And so kind of every sales manager I've ever had, they kind of tell you some things that are right on the border of outright fraud and stretched truth. And so it's the grass, and the grass isn't always greener, right? So I took a couple opportunities. I thought the grass was greener, and they had their pros and cons. They definitely had their learnings, but I'm back home now here.
So you went to sales. You completely left Edward Jones and you went and did.
Yeah. Well, that's actually, yeah. So I took 2 books of business, and then what happened was the second book of business I took was for a highly regarded name everyone's heard of. And that one was like the most blatant, where the sales manager really kind of rounded some numbers up that I didn't appreciate. And so And he went on, I think actually right when I started there, he went on a month vacation the week I started. So I'm like,
Wow.
what is going on with my, and I got to, and like working through a bank, right? This was through a bank, let's say. And working through a bank, you really have to like keep banker's hours. Like you have to like wear a tie, you have to be in there in the morning and stay until and there's not, versus at Edward Jones or where I worked before, it's kind of like you produce numbers, we take a cut of your pay and just get the job done, make your numbers work, everything else will work itself out.
Right.
And so this was more like, no, be at your desk from 8 to 6. It's like, why? So I was starting to get frustrated, and so I took 2 years. I worked, sold medical devices for Stryker Corporation. Actually, sold trauma, and I had some buddies that I played football with that did that out of school, and so there's an opportunity in the area. I was living in Northern California at the time, and they needed somebody, and they didn't get the rep they wanted, and so my buddies told the sales manager, you should talk to this guy. So they talked to me, and I'm like, yeah, I'm done. I don't want to do this anymore. I don't want to wear a tie. I don't want to work in a bank, And so did that for a couple of years, and that was a lot of fun. And
let's hear what the day-to-day is with that.
Yeah, for sure. So it's a really cool job. So my little brother's still very much involved with the firm, and it's really cool. So it is a very interesting opportunity. I think that medical devices in general is not what it was, right? Like it used to be this job where you really can make a lot of money. And it was kind of like a very highly regarded thing for people to do well in school and stuff. And so, and now it's maybe not quite what it was, but you can still do great. And so the day-to-day is so what I sold was a trauma portfolio for Stryker. And so our bread and butter was like intermedullary rods, essentially. So when people break their femur, it's actually so our bread and butter was what's called a gamma nail. So when someone falls, generally it's a geriatric fracture, but it doesn't have to be. When someone falls and breaks their femur, their proximal femur, so their hip, basically, I think of when grandma breaks her hip, especially as an older person, the probability of death is very high if you don't ambulate in the first couple of weeks. And what the gamma nail does is it allows you to ambulate the next day. So it's a rod, and you basically drill a little hole in the top of the hip, essentially, and you slam this rod into the femur to stabilize, and it stabilizes everything. Wow. And so what I did, or what Stryker trauma reps do, is they represent the company, and they actually bring some of the supplies into the hospital to help the doctor technically with the technical aspects of the procedure. And then also the like I said, they have most of the stuff there, like they should have the nails and the instruments. So I think this happens in the middle of the night a lot of times, right? So someone will fall, and then they'll have surgery 10 o'clock at night, 2 in the morning, whatever.
Oh.
And again, a lot of this stuff is there on the shelf, but a lot of it's not. And so so A, you bring the stuff in, you make sure all the stuff is there, the instruments and the implants, and then B, you help the surgeon go through the procedure.
So you're actually in the operating room.
Yeah. So
blood and guts don't do anything to you.
Well, they did it first, actually, but also really I was so out of place and so nervous that it's like, that's the least of my worries. I just want to not mess this up too bad, Uh-huh. And so it was definitely a leap. It's very different from what I do now, and I prefer this much more. For sure. But I learned a lot. I saw a lot. I thought it was really, really, this is so unimportant in some ways what I do now, like as a financial, not being a financial advisor is not important, but it's like you're moving around capital in a way that's really going to matter in 10 years. Mm-hmm. You're not going to know the results right away. It's just kind of like, it's all just, I don't know. It's just ones and zeros in an account somewhere, versus if someone you knew like had a proximal femur fracture and they can't, like, this is life and death, not quite life and death, like a thoracic surgeon or something, but it's human carpentry, and it's very interesting. And I think that, yeah, I'm glad I did it. I would say that I'm glad I'm done, but I'm glad I did it for a little while, and it's very eye-opening world. Nice. And so now you're a financial advisor. Can you tell us a little bit about what that entails? Sure. Yeah, absolutely. So a financial advisor is a very broad term. It means a lot of things. You have fee-only planners, and so that's like somebody that that does financial plans. And so people that are retiring, they'll pay several $1,000s, and they'll get a financial plan from a fee-only advisor, and that'll tell you when you can retire, how much money you can take every month, your withdrawal rates, how much money you're going to have in the bank 10 years from now. So that's one spectrum. And then the other spectrum, and everything is a spectrum, right? There's people that do both. I like to try to do, I'll come back to what I do, but you know, I focus on both. And then the other end of the spectrum is financial advisor is really just a term that's been updated from stockbroker. And it's somebody that sells something to do with finance. And there's people, friends of mine, that don't even have a Series 7 license. So they can't sell stocks and bonds. They can't solicit stocks and bonds. They just can sell life insurance and maybe mutual funds. Even I've heard people call themselves financial advisors that can only sell life insurance and long-term care, right? Wow. So the word, so financial advisor, it can mean everything from financial salesperson to I'm a fiduciary.
Your father too.
I do financial plans. Yeah, right. Yeah, so it can mean so much. That's the problem. Right. But I think what you asked was kind of what I do now and what we do. So what I do now is really it's kind of blending both. So I've got a chartered retirement planning counselor designation. I do think planning is important, and I help people, especially as they're getting closer to retirement, to figure out withdrawal rates, like how much are you planning on withdrawing from these accounts? Is that sustainable? What options exist in the marketplace? Meaning, can we guarantee some of that income via maybe an annuity, to structure a plan that works just right for you and your family? So that's about half of what I do. I'd say that's about 30% of what I do, and about 70% of what I do is investment management. And I really just help people, young people, old people, find not take any more risk than necessary to get where you need to go and to make some money on your capital. And that's the whole name of the game.
So in terms of retirement, what's the big misconception out there? Because right now you said that you talk to people who are getting ready to retire, and now you're going to talk to them about a financial plan. Well, yeah, shouldn't they be thinking about this a lot sooner than when they're about to retire?
Yeah, you would think. Well, I think, yeah. So a couple, I think, misconceptions that people can, kind of investigate for themselves. I think that this idea that retirement is a destination, I think that this is like a softer side, but one thing I think is that this idea that retirement is a destination makes sense for some people. Like if you're a school teacher, I've got my mom and sister that are both school teachers, and there will be a date, they check the box, they collect the pension, they're retired, right? So they have a very cut and dry destination. But for most people, you've got different buckets of money you're pulling from. There's a lot of moving parts, and I think that looking at it is maybe more of a journey, and less of, that sounds so corny, but more of a journey and less of a destination is probably a good. That's probably a good idea, especially for people that it's unless well. And so two things on that. So one is that the only guarantee is an annuity, right? So you can guarantee your income in retirement by tying up some of your money with an insurance company, and the insurance company is, which is very safe. Even if something were to happen to that insurance company, generally these companies are, these bail each other out, and so it's never really been a problem for individual pensioners or individual annuitants to collect on their annuity stream. And so an annuity, anything aside from like, hey, you take $100,000. You guarantee it at 6%. You're going to take $500 a year off your $100,000, or $500 a month, $6,000 per year off your $100,000. Anything aside from that is a projection. Mm-hmm. And so that leads to, I think, the real misconception, and that's really where I think I have a differentiated offering, which we can talk about. But it's like, I think that this idea, so everybody has, so risk tolerance, right? Everyone wants to know, oh, what's your tolerance for risk? Well, the dirty little secret from the industry, 10 years of doing this, is that everybody has the same answer. Everybody says the same thing. They want moderate risk, okay? And there's no such thing. Nassim Taleb famous author from the book Black Swan and Anti-Fragile. There is no, he says there is no moderate risk. There's risk and there is no risk. And there's,
Right.
There's treasury bonds that are backed by the full faith and credit of the United States government, which has the greatest military in the history of the mankind, and a printing press. And there is, and then there's risk, and that's it.
Right.
And so I think that people don't understand that. And so I think that a lot of what people in my seat end up doing is painting a picture of something that's, oh, it's, and then so realtors, which whatever, but I'll just say it. But but like realtors have a reputation for, oh, you want to sell your house, Nana? Today's a great day to sell. Oh, you want to buy a house? You said. Oh, today's a great day to buy a house too. Well, how can that be, right? It's one or it's the other, right? It's either a buyer's market or it's a salesman, or something in between. But it can't be an absolutely great day for both. And so I think the financial advisor version of that is a lot of people are just cheerleaders. They just, oh, well, it always goes up in the end. Says who? Says who it always goes up in the end? It's gone up in the end. Japan, it hasn't. Japan's actually below the Nikkei is below where it was in 1990. Right? Wow. That's 30 years ago, and it still has not recovered to the highs. And so why? And if you look at their central, this is probably more in the weeds than people want to go, but it's like if you look at their central bank, our central bank's, the Federal Reserve's playbook, we're borrowing a lot of the same plays that they were running. Right?
Oh my gosh!
Right, that could lead to stagflation and could lead to 25, 30 years of not great economic growth. And so I don't know. These are all above my pay grade, right? And so I incorporate the uncertainty into my process. And so the process is, so last thing, and then tell me what you think. The process is, what I do is I start with planning, because you can't invest people's money without figuring out what, you can't just take people's money and just throw it at things. You need to have a plan. You need to figure out like how, what's the time, what's the duration of this money? What do you want it to do for you? What are you expecting? Where does it fit into your overall pie? So that starts with a plan. And then from there, it's the ongoing nip tucking, right? So I help my clients build portfolios, but no portfolio is stagnant. Right? We're not just gonna, well, I think 60% stocks and 40% bonds. So that's the output of everybody being moderate risk or saying they're moderate risk generally is the 60-40 portfolio.
I see.
And so one note on that, that's interesting, is that like the problem with that becomes, so 40%, your hard-earned money, right? You saved 100,000, $1 million, 2 million, 10 million, whatever. $100,000, you saved hard money. We're gonna take 40,000. 40, almost half the money, we're going to put it into bonds. They're going to cost you 1% at least in fees, because I'm going to charge 1%, let's say 1.5% in fees once you add it all up. And the bonds only pay 3%. So yeah, half the fee, half the income, half the coupons going to me, or me and my, intermediary cronies, if you will. And the other half is goes to you. So it's 50-50 split. And it's like, bonds make sense as a tactical thing to own for a certain period of time, but you're going to do that for 20 years. It doesn't really. So I think the point is that interest rates have come so low that I think it makes sense to kind of open your eyes to other things. And I think I'd rather own 60-40 gold than I would 60-40 stocks bonds. I'd rather own 60% stocks, 40% gold, or some amalgamation thereof, right? And then the last thing is that, like I said, so it's an ongoing nip and tuck. And so you're incorporating volatility, you're incorporating what these assets are doing, and certain things you don't want to own at certain times, and I think certain things you do. And so you got to kind of, like a garden, you got to prune and plant. So
let's talk about the day-to-day.
Yeah.
Come to the office, and then what happens?
Yeah. So personally, what I do is I come to the office. I have a yellow pad that's kind of my mission critical, like things I have to do. I upload it to the cloud every night before I go to bed, or I wouldn't, it's hard to sleep. And basically that serves as like my to-do list of what I got to do that day. I come in, I fire up the computers. I always am generally here by 6 and trying to get an idea of, I have like research I subscribe to and research that I pay attention to. And getting a sense of where the markets are at, getting a sense of kind of where we're at from a 30,000-foot view, seeing, and then so then from there, it's a game of triage, right? And you're just figuring out what's the biggest things I got to do today. So, big account wants to review his account, and then Mr. Smith wants a call back about some life insurance thing. All right, got to deal with that. And so you just kind of triage what it is you got to do, and then from there, it's really just a lot of client reviews. And so reviewing stuff with clients. My best clients are friends at this point. They're people that I'm friendly with. So it's not a super formal, it's Mr. Smith, how's it going? Great, cool. So but I spend a lot of time on the phone, a lot of time on Zoom calls. And then the last thing is it's a lot of learning, right? So I do spend a lot of time reading research, looking at different things. I'm looking at alerts that I set, that different prices crossing various like indicators and stuff. So that's how I do it. Different people do it different ways, but that's what I do. For me, get to the office by 6. Really, my day is done by 2 or 3 as far as like the blocking and tackling. And then some days I'll have a 7 o'clock call, and some days I'll just hang out. I'll be at the office hanging out as far as like reading and working on stuff, optimizing the business until 7 anyway. So sometimes it's really long, but then also I've tried to get it so where really I can come in early, and if I want to, I can get out here early as well.
So in terms of a personality type, is there any sort of certain personality type or interest level that someone you'd say, oh, you'd be great at this?
Yeah, that's a really good question. So my personal opinion, I hope my boss doesn't see this, is that most people, there's a problem. There's authoritative types do really well in this business. There's a lot of people that want to tell people other people what to do, and they do well. And they do well. So if you were, so if you're an authoritative type, or that's a common.
So they have a lot of confidence. You're going to invest here, and you're going to put this here, and that's what we're doing.
Yeah, right. I was selling cars until 2 months ago, but I feel very comfortable telling you what to do with your life savings.
You're $10 million. I'll tell you exactly what to do.
I'll tell you exactly what to do, right? Because my company told me, and they don't have any conflicts of interest, I'm sure. And so that's one I see a lot, quite frankly, and I think that's a problem. And I don't personally, but what I think where I think the industry is going, and of course I'm talking my own book. I have my own biases, and on my own, I'm taking all what I say with a grain of salt. Take everything everybody says with a grain of salt.
Right.
What I think is that where it's going is that it is becoming more analytical. I think people are getting sick of salespeople in this persona. I mean, I know so many horrible stories of, like, I can tell you the story 100,000 times of Mr. and Mrs. not super sophisticated investor go to Mr. Salesperson and buy a product they should have never bought. And there's rules governing this stuff, and so it's not like they're literally fraudulently ripping anybody off, but they're really jamming square pegs in round holes. And that's more the authoritative. And I think the personality traits that are best for going forward are going to be analytical, because I think that there's a lot of baby boomer advisors. I don't know, is that not fair to say? People that between 40 and it's not 40, excuse me, between 55 and 70, there's a huge amount of advisors that are that age. They've been doing this for a long time, and they're not analytical at all. They were pitching stocks, and then now they're planners, but they're doing whatever they got to do to pay the bills. And I think that that there's a younger crop of advisors that I'm noticing, men and women, and actually more and more women, who I think are, to really kind of stereotype, I think women are better at this for a variety of reasons. I think that they're generally they're better at this. They're actually better at, I think women generally, there's studies to show women are better investors temperamentally, and they actually generally do better.
Wow.
But that makes sense, actually, because if you think about it, it's such a male-dominated industry that if you're a woman that became a portfolio manager, you better be really, you must have been really special to get to that level. So right. I think that from an investment standpoint, and then I think from an empathy and planning standpoint, I think that I know with my wife, like I can't even plan a weekend. It's Friday. I couldn't even tell you what I want to do tomorrow. And versus she's planning things months down the line. You know, and that's just me. Not that that's everybody, but my point is that I do think the future advisor, the advisor of the future is more female. It's more analytical, and I think that it is really somebody that can take a long stake at this, realize it's a long game we're playing, and put yourself on the side of the client, and slide your chair over there and look at it from their perspective. Not what's your commission, not how you, but how do you, for the next 20 years, I'm going to look at a bunch of different stuff, and I'm going to help you make some important decisions. Do you need long-term care insurance? Do you need to guarantee some of this income? What's a good withdrawal rate? You know, and then lastly, what are we actually going to do with the money, right? So anyway, that's what I think.
Outstanding. Well, it's fascinating, absolutely fascinating. Data is so cool. I love it so much. So it's so nice to hear that. Okay, so do you have any advice that you want to share with people generally about their career, about life, whatever feels important to you?
Yeah. Yeah, no, I would say that fit is super, like, okay, so I think that do what you love is like the most overprescribed, dumb thing to say in some ways. But also that was kind of like my take if you would have asked me a couple years ago. But my personal journey, it's not what you love, but it's like what the society demand that you don't mind doing, that you can be better than the vast majority of people. Like that's, I think, how you really make money, I think. And so for me personally, you know, I figured out a lot of things I didn't like. And I don't like being a cog in a wheel. I don't like doing things I don't believe in. I don't like selling. I don't like going into hospital. You know, I don't like going into 5 different hospitals per day. I don't think anybody does, but the pay is pretty good. But I can come here every day. I try to walk to work a lot of days. And I could come here every day. I can get here at 6. I can drink a cup of coffee, and I can be interested in what's going on in the markets. And I can do that until 8 o'clock at night, and I can be pretty happy. So I'm not, you know, jumping for joy. It's not as fun as like going to the beach with my friends, but there's a certain level of so I think, yeah, just to kind of put some nuance there. I think that it's doing what you maybe not love, but I do love doing this. So I think I've come around, I've learned to love it, you know? So yeah, that would be my 2 cents. It's just like, what do you want to do on the weekends? And then look, if it's play video games and, you know, get high or something, it's like, maybe you should have better hobbies. Not that those are horrible things necessarily, depending on what you're getting high on. But I think that you should have better hobbies. And like, what if, like on the weekends, I actually spend time on Excel and on TradingView and like reading. That's what I like to do. And that's what I did when I worked at Stryker. That's what I would do. You know, that's what I enjoy. And so for me, like incorporating that in my business and making my business my life and my life my business has been fun personally.
So often in sales, when we have a big sale, it's the thrill of victory, right? I closed the sale. So for you, what do you have any of those? Oh, this is great. This is what happened today.
Yeah, that's a really good question. And I think that, yeah, it's less and less. So there's a lot of them, right? So first of all, like, you know, we're making and losing money every day. And if I'm recommending something to clients, the only way I feel comfortable, you know, recommending you subscribing to this certain type of investment as if I've got some skin in the game, because why else would I tell you to do something if I'm not doing it, right? So definitely making money in and of itself, and especially investments, having a thought, having a differentiated opinion that inflation is going to, you know, kick in here in the back half of 2020 and into 21, and you should position your portfolio in energy stocks and material stocks. That was a very non-consensus opinion in September, October, and that got you paid. And people that incorporated that strategy made money. And but it's, you know, there's never one day where you necessarily we're going to wake up and jump up and down, hopefully, but that is really fun to me. I really like doing that. And then the second thing I would say is just the ongoing like tinkering and efficiency improvements. So just like dialing in my book of business, my process, how I work with my clients. And so that's but it's definitely become less more subtle, I guess I would say.
And so the old and gray Andrew one day, upon the day that you decide to pursue your hobbies, whatever those would be, what do you hope you can feel about your career?
Yeah, that's a really good question. I think that I hope that I've shepherded 100 families or whatever it ends up being on a lot of ups and downs. And I think that it's really, I think if you're doing this job correctly, it's not about me. It's not about, I'm just a guy here to help you. And that's, I hope when I don't know, I see these guys at the guys that really crush it. And it's like, once you dial it in, I don't see a day when I necessarily, maybe I'll sell the bit. I don't know. But I guess the point is that it's a good question. I think I would be happiest if it's not some big victory, but it's a bunch of small shepherding these people for a long journey and avoiding big blowups.
I like that. If somebody wants to reach you, do you want them to find you on LinkedIn and reach you that way, or what's the best way for people to reach you?
LinkedIn's a great platform.
Okay.
I'm on there. Yeah, let's leave that one.
Most people that they're listening to this are on LinkedIn. So perfect.
Yeah.
We'll just have them
Andrew
find you on
Shaw,
LinkedIn.
LinkedIn, Edward Jones, Cardiff, California. That's a great place to find me.
Outstanding.
And yeah, thanks for having me on. This has been fun.
My pleasure. Thank you for helping us out. Hopefully we've inspired a few people to go one direction or another in this pursuit of their career.
Maybe talk some people out of it. Yeah.
Well, yeah, I mean, truly, it's nice to have an opinion about something before you jump in.
Yeah, 100%. And I really, what I would say is, and maybe in conclusion is, yeah, I'm on LinkedIn. If you, I think you have to get in the business how you get in the business, right? So maybe you have to sell some life insurance. You don't want to, so nothing, I don't think that poorly on anybody that's got to do what they got to do. But I think that, just be aware of what you're going to be asked to do. And if I can be helpful there, please reach out. Andrew Shaw on LinkedIn. Yeah. So.
Yay, Andrew Shaw. All right, my friend. Well, nice to talk to you.
Thank
you.
Have
a wonderful weekend, and I'll see you again soon.
Sounds good.
Thanks.